I'm Russell Clark, and this is VixShield's Market Close Recap, where it isn't news till we talk about it. Here's what actually happened today. We came into this Tuesday with the morning outlook calling for continued risk-on behavior, even as the Middle East story kept bubbling. I told you to watch how the market digested those latest flashes out of the Strait of Hormuz. Remember? I said geopolitical heat can coexist with equity strength when the real supply shocks stay contained. Well, folks, that's exactly what played out. The S&P pushed higher through most of the session. Volatility kept sliding. Our community stayed disciplined, and the signal delivered. Let me walk you through it step by step so you can see exactly how our methodology reads the tape. The day opened with traders still pricing in hopes that President Trump's call for Iran to do the smart thing might actually produce some breathing room. By midday, the fragile ceasefire narrative was holding just enough. We saw flashes confirming NASDAQ records on AI chip strength, Intel and AMD leading the charge again. Even after reports of sailor deaths and vessels stranded, even after that UN Security Council resolution talk, the broad market refused to roll over. Mid-afternoon brought the real test. Those breaking flashes at 1700 hours and again at 2001 laid it out clearly. Iran disrupting the strait, 10 plus dead, 23,000 stranded, gasoline prices threatening to push toward $5 a gallon. Fed's bar warning that this could bleed into broader inflation despite our energy insulation here at home. Goldman Sachs out with a note saying this might actually accelerate European electrification and spark a whole new investment cycle. You could feel the tension between risk on equity momentum and that geopolitical premium trying to expand. Yet here we sit at the close with volatility lower than where it started. The VIX settled nicely below its 5-day moving average. That declining volatility environment is exactly what our iron condors are built for. This morning I highlighted the EDR filter and the entry gate. Both cleared. The RSAI engine said place the trade with conservative and balanced tiers active. And that's what we did between 3:05 and 3:14, just like the protocol demands. Our condors sat right in the sweet spot all day, while the big money digested the noise and kept buying the dip. Now let's talk about the traps that fired today, because they always do. Look at the headlines that flooded the wires. The S&P just broke major support. Another 10% decline is likely. Sell signs are showing up. Tech sell-off breaks major support. Market Watch, Schaefer's, all the usual suspects running the same fear script they've run 100 times before. You know what that is? That's the classic Wall Street playbook. They scare retail into selling the weakness so the institutions can buy it cheaper. They overhype every support break, every trend line test, every pullback risk. Why? Because fear sells subscriptions. Fear generates clicks, and fear creates the very volatility that market makers harvest. Remember last Thursday when we said watch how these same outlets would spin any ceasefire hiccup? Well, here we are. They spent all day painting pictures of unraveling while our community saw the real story. The ISM services data came in soft, but still expansionary. New orders holding up. Prices paid elevated but not breaking higher in a disorderly way. Bitcoin pushing toward 81,600 on the risk-on tone. Ethereum finding support. Even Solana showing strength. The smart money wasn't panicking over Hormuz. They were positioning for the next leg once the immediate headlines fade. Our tribe sees through it because we've trained ourselves to look past the noise. We don't chase the fear trade. We don't listen to the talking heads who are wrong on the last 5 pullbacks. We follow the RSA verified signals, the EDR readings, and the disciplined rules that have been battle tested for years. That's what separates us. While everyone else is guessing, we're executing a methodology built for days exactly like this one. So what worked today? Everything our system is designed to do in a declining volatility regime. The iron condors we placed handled the action beautifully. They stayed comfortably inside the range, while the tape ground higher in that quiet, almost complacent way that catches so many people off guard. The ALVH protection layers stayed fully active across all three time frames: short-term spike guard, medium-term wave shield, long-term endurance hedge, all three on duty. Even though we didn't need them today, that 1 to 2% annual cost is the cheapest insurance you'll ever buy. It offsets 30 to 50% of losses in those 10% plus drops that inevitably come along. We also saw the theta time shift mechanics engage in forward mode. With the temporal reading above threshold and volatility still above 16, the system signaled to extend exposure out to 7 days to capture additional vega. That's not guesswork. That's the temporal theta martingale and temporal vega martingale working exactly as designed, turning time into our ally instead of our enemy, rolling forward on vega swells, then rolling back on the pullbacks to harvest decay. This isn't some retail options gamble. This is professional grade risk management that most people never even know exists. And that's the educational piece I want to drive home on this Tuesday debrief. Let's talk about why we round calls up and puts down on up bias days like today. It's not arbitrary. When the EDR and the intraday bias both lean higher, rounding the call side upward gives us a little extra room where the real buying pressure lives. Rounding the put side downward keeps the lower wing tight against support levels the big money respects. It's math meeting market psychology. It keeps our condors centered in the highest probability zone while still collecting solid premium. Do that consistently, layer in the ALVH hedge, respect the VIX risk scaling rules, and you stop playing the market's game. You start running your own. That's what we learned again today. Discipline beats prediction every single time. Patience in the quiet tape. Readiness when the next Hormuz headline hits. This is how we protect capital and generate income even when the world feels chaotic. Zoom out with me for a second. Today fits into a broader pattern we've been tracking for weeks. The market keeps absorbing geopolitical shocks that would have cratered sentiment just a few years ago. Why? Because rates are stable. Because AI capex momentum is real. Because the dollar finds bids on any inflation scare. The fragility curve is working in our favor right now. The bigger the system gets, the more stress it can handle before it cracks. But only if you protect it properly. The smart money isn't fighting the trend. They're using these dips to add to quality names. They're letting volatility compress so they can sell expensive premium. And they're quietly preparing for the next energy volatility wave. Retail? They're reading those scary headlines and either freezing or doing exactly the opposite of what the signal says. That's why so many of them stay stuck. But not us. We're the insiders. We built this community so we could talk about what actually works without the noise. And tomorrow, we'll be ready. We'll be watching whether that fragile ceasefire in the Middle East holds, or whether Project Freedom actually produces tangible progress on reopening the strait. We'll watch the follow-through on those ISM numbers and whether services inflation starts to feed into the broader picture that Fed's bar warned about. We'll monitor Bitcoin correlation and see if the risk-on tone carries into Wednesday, or if we get the mean reversion move in volatility that often follows these compressed days. Most importantly, we'll let the RSAI engine speak first. No ego, no prediction, just pure signal. If the entry gate stays met, we'll place again. If not, we'll sit in cash with full ALVH protection and wait. That's the beauty of this. We don't have to be heroes. We just have to be consistent. This is why we built this community, folks. While the mainstream media scares people into bad decisions and the institutions harvest the volatility they create, we stand apart. We have the methodology. We have the discipline. We have each other. 20 years of refinement distilled into a daily process that anyone can follow once they commit to learning it. And be sure to listen for any breaking news from Miss Vicky throughout the evening. Those time-stamped flashes have saved us more than once when the story changed after the bell. These signals and insights are for educational purposes only and are not financial advice. Past performance is not indicative of future results. This is VixShield, your daily protection against market uncertainty.